Okay, we are live. Good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, the 29th of August. Okay, last day of the month. Quite a few options expiring today on Bitcoin and Ethereum as well. So quite a lot of activity. But let's go straight in the market because we are hitting a demand zone right now, and it'd be curious to see what happens if the zone gets respected and what happens to Bitcoin in the kind of near term. I just wanted to give you an insight. Okay, so this is a Bitcoin 15-minute chart. Okay, so let's go. First of all, let's go back.
We don't see it.
Oh, sorry, can't you see? Let me try again. Share. Can you see now? Yeah, okay. So first of all, okay, the zone that we are looking at on a daily chart. Okay, as you can see, this was the primary zone. Okay, which is when Bitcoin made a push in. Why are you always in the way? I can't see my chart because I got Zoom. Sorry, I got Zoom controls in the way. Let me just move it. Okay. So when the Bitcoin made the last push, it was the beginning of July, and kind of broke the all-time high, made a new high. First of all at 123, and then more recently, went up to 124. But this move here was the most relevant one that we're waiting for. Okay, so we hit that level on Tuesday after a kind of like a drop. We hit a new all-time high that wasn't supported by a lot of volume, so price dropped back down. It created a kind of like a downtrend, and then we hit that zone and price pushed up all the way back to kind of like 114. So already, from 109 to 114, it's already kind of like a 5% move. But then where is it that, so this is kind of like an insight of the way of what I look for, okay, when these things happen. So at that time, so we were at all-time high, and price goes lower, okay, lower low, lower high, lower low, lower high, lower low, lower high. We carry on playing this game, lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high. So something is changing. Okay, at which point we can say, you know what? This constant move down has now changed its nature. The point is when we are breaking the previous high. So the expectation is when a trend continues, is that it carries on making new, in this case, it's a downtrend. So you would expect is when it make this a new low, then to bounce and make another new low. But in this case, it didn't. So first example is it's here where it actually raised its head a little bit. Okay, you can see the price went into above this green line, and then here the breakout, the proper move out of that, it's here, is this one. Okay, when price explodes out and moves up to a new level. Now, since that happened, so I always look at kind of like imbalances in demand and supply. And so we're looking, what is the zone that dates the origin of the imbalance? Okay, so there is an imbalance when things change. Look, in this case, this move wasn't supposed to happen if we are still in a downtrend. Okay, so at this stage, you're thinking, okay, this is the origin of the imbalance. Wait, so it takes a while. So it's not, when we are doing kind of like investing and trading, it's not something that you need to be 24 hours in front of the computer. Okay, this is from Tuesday. So Tuesday is when this move happened, and then today is the first time it gets tested. So the way we'll see them. So if we were to, and we are right in this zone right now. Okay, so So it'll be interesting to see what happens. So the risk at the moment, if you were to enter this trade right now, the price is 110,100 and something. Okay, and the lower part of this would be 109,600. So it's a risk of roughly about $400, $500. I mean, you will need to put your stop a little bit below that. So, and with Bitcoin, then the volatility of Bitcoin, we'll need at the very least to put your stop under here. So let's say at about $1,000 worth of risk on a full Bitcoin, with the potential of, if this is the zone that causes then this trend to change, what was like a downtrend to morph into an uptrend or even a sideways trend, this could then change. If it was like a new uptrend, then you could expect it to make a new high to above this point, which would give us 1, 2, 3, 4, 5, 6 times what we're risking. Okay, if it was even a kind of sideways, the price actually just hovers in this area between 110 and 113, we could still take profits here at the top of this range at about 1, 2, 3, let's say between 4 and 5 times our risk. Then if we say this one is a bottom and it could move all the way up and make a new high, we could keep a little bit as a runner to eventually to move higher. But it will be interesting to see. Let's keep an eye on it for the rest of this call and see what price does, because it could go all the way down and break this. This is where the stop will need to be. Okay. So let's keep an eye on it for the rest of the session and see what happens. Okay, so whenever we're doing kind of like investing like this or trading, so to speak, it's not so much I've made X amount of money or dollars or pounds or whatever it is, but it is how much have I made compared to what I'm risking. So the point is the price that you pay minus the stop, where you will say, well, actually, you know what, I was wrong. So at that point, I will take the loss. So that's your risk. Okay. And then the point in which you're aiming to take the profits, that will be your reward. So whenever there's a kind of like an investment, you're using any money for any reason, for investment purposes, whether it's long term or short term, it's always, what do I get compared to what I am risking? Okay, and so that's the thing that I wanted to share with you. I just wanted to do this straight away today because I think we are right in that zone, so it'd be a nice sort of case study to look at. And now let's start the usual things that we do every week. So let's look at the economic calendar. Again, first of all, for the week, this was a fairly simple week from the term, from the point of view of economic news. So there wasn't much. The main thing was actually at the weekend. So the thing that moved the market more than anything else was the Jackson Hole Symposium. Okay, and that was in particularly on Friday when Jerome Powell was speaking. I did tell you this last week during the crypto hour last week. And in effect, what happened then? That during his speech, by what he was saying, Jerome Powell told us that the Fed is changing its focus. Okay, where before he would say, we are mainly wanting to control inflation. On Friday, he said, actually, you know what, inflation is pretty much under control right now. We are worried about jobs. Okay, because the job market is deteriorating, so a shift in our policy is probably due. So that was taken from the market to say, well, we're going to cut interest rates soon. Okay, and that caused like a fairly strong move in everything from stocks and shares, from crypto and everything else. Okay, so that was the main thing that moved the market last week, not necessarily just economic news, like number-based news. Often it's just, just understanding what the policy is going to be regarding, regarding the attitude of the authorities. So this week we are just, just the CPI figures for Australia. Actually, quite going up quite a lot. CPI went up from 1.9 to 2.8%. This week, not much, just mainly the unemployment claims, which are weekly figures. They are just, again, just slightly below expectation, but we are still between 1.9 million and 2 million. And the only reason why they're not going up, so they're talking about US unemployment figures, by the way, they're not going up as much is because so many people were sent back, so many workers. So there is like the supply of labor, it's a lot lower than it used to be. The things that there's still one bit of news today that's fairly important, which is again, it's another measure of inflation. So it's not the CPI, but it's called the PCE price index. And that's so generally it's relevant because it's the main index that the Fed looks at, with regards to inflation. So that's coming out today at 1:30 p.m. at my time, so in about 4 hours. Okay. And going to next week. Thank you. Going to next week, there are some manufacturing figures being announced, that like the monthly figures, but the most important announcement is at the end of the week, the non-farm employment change. Okay, again, so this is because again, this focus now is the job market. So whatever is happening in the job market, and this is like the most important snapshot of that every month, which is that the first generally the first Friday of the month, will probably tell us what's happening with interest rates over the next few months. So the interest rate decision is a little bit further up in September, and this is what kind of we are waiting for. Will be on the 17th. 17th of September is this the Federal Monetary Committee meets and decides the interest rates. Okay, so there is now, after the Jackson Hole Symposium and Jerome Powell's speech, there is an expectation that probably is going to be an interest rate cut then in a couple of, in about 3 weeks, time. Okay, so moving on, let's have another look at this. We're still within this zone. So again, this is no investment advice. We got no idea if this particular zone will work or not today. This is exactly the type of zone that I am looking, that I generally look for. So I generally tend to go for these zones, all the time, but sometimes they work, sometimes they don't. The important thing is that when they do work, you make more money than when they don't. Okay, so it's the type of risk to reward that you include in your plan if you are trading is of paramount importance. Okay, so being a good investor, being a good trader is mainly controlling your losses more than making huge gains. Okay, if you can limit the size of the losses that you take, then you'll do well. Okay, so let's move on. So what did that? So let's have a look again from the macroeconomic point of view before we look at some crypto news. Let's go on to, sorry, not this, not what I talk about. So from a point of view now of switching, what is probably going to happen on the next few months, and including the fiscal stimulus that is coming and the kind of a limitation in the labor supply, that will cause that. Probably what's going to happen in the next few months is the only way of I'd say an increasing slightly the economic that will start reacting to the cutting interest rates, and at the same time that the very limited supply of labor will mean that there's going to be a push on wage growth. Okay, so when wage grow, then obviously people have got more money to spend, more money to invest, and we are probably going to have a good 2026 from the point of view of risk assets. So in a period where growth is accelerating and also we are starting a new cycle of monetary easing, we are probably in the top quadrant. So this is a kind of estimate, but normally this is when the top quadrant is where it's what is called the everything rally. So US small cap, commodities like gold and silver, Bitcoin should all do well in this quadrant. Okay, but in particular, so it could be the assets that are considered riskier. So crypto obviously is part of that. A small cap normally are part of that as well. And in general, stocks and shares that have a high beta. Okay, so high beta means that they grow more than the average market when prices are going up. But just remember the other side of the coin. When prices are going down, they go down more than the average market. Okay, so probably this is the new outlook following until we hear something else and everything changes again. Probably from a macro point of view, this is where we're heading over the next 6 months plus. Okay, let's go now into some crypto news. We'll do another few minutes of this and then we'll take questions. Now, first of all, I said I already posted that for those of you that are in the IIW community. So talking about safety again. Now, there is a vulnerability, especially in Apple iOS software, that could allow potentially scammers, let's say, to get access to whatever it's on your phone, okay, without you even having to click on anything. Now, this is why, first of all, it is important to always update your software on your devices. But also, this is one of the reasons why I know that we live live through our mobile phones today. Okay, but I always erred on the side of caution. Like I don't have the banking app on my phone. I don't have. I do have a little bit of crypto, but not my main crypto exchanges or my main crypto wallets are not on my phone. Okay, because something like this happens, or you get, like it happened in London several times, that people get mugged. Most of us have got facial recognition on our phone. They point the phone at you, they get access to your crypto exchange and transfer money. And some people have got hundreds of thousands on the crypto exchange, the money gone in literally less than a minute. Okay, but this is even more worrying in a way because it can happen without you even realizing, without you clicking on anything. So this is this image framework which handles image processing across devices. The specially crafted image could cause memory corruption, potentially allowing attackers to execute code on a targeted device without any user action. Now, generally speaking, they wouldn't target like you and me, but they would target specific people that they know have, big crypto holdings. But you can never be too careful. So if I can tell you what my attitude is generally, I just hold the smallest amount of crypto I can on my wallets, that only what I need to use. So if I'm going somewhere, I know they're going to use some crypto, then I'll load it on my mobile wallet to use. Apart from that, all my crypto is off my phone. Okay. So generally speaking, I don't hold more than at the very most a few $100s on my phone. The rest is completely off. And the same for banking apps. Okay, I don't do my banking through my phone. Okay, but this is obviously I'm just giving you a warning, then it's up to you to do whatever you like. But you got to be aware of these things because they are happening out there. Okay. Now we're talking about Bitcoin, and this is interesting because um, since the ETF were launched, and that was it's kind of like a year and a half ago now. So that was January 2024. Now the ETF have amassed almost like 60 billion worth of investment. And now they are kind of they are a major source of Bitcoin spot trading volume. Okay. And so Binance is still the biggest spot trading market by far. Okay. But it's now if you can see that generally the Bitcoin ETFs are now can generate as much between 5 and 10 billion of daily trading volume. And Binance is about double that, so it's about 18 billion. But it's actually quite relevant. So it shows you there now how institutions are increasingly, warming up to cryptocurrency, especially Bitcoin and Ethereum. And this has become one of the main places that they are trading these rather than using cryptocurrency exchanges like Binance. So in a way, Bitcoin and Ethereum as well are becoming more institutionalized than the rest of the other coins. They are not available to purchase through ETFs. Now, in terms of ETF, there's that there are several ETFs that are in the kind of in the pipeline, and one particular one, it's a Grayscale Cardano ETF, whose kind of the final decision would come at the end of October. Okay, October the 27th. Okay, now now it's interesting to see then now prediction markets, which are where people can actually bet on any particular outcome, but they actually put their money behind it. So it's not just, I think that will happen. They say, I will bet X amount of dollars that on October 27th, the Cardano ETF is going to be approved. Now, there is now 83 chance in the prediction markets now that the SEC will approve the Grayscale ADA ETF. Okay, so sorry, by the end of 2025, and this is up from only about 42% a few weeks ago in June. But over $400,000 have been bet on this outcome, so making it one of the most watched events in the altcoin market. So what difference would it make? Again, to say if any ETFs or any coins is approved, it means that then that coin becomes investable from institutional investors. Okay, so again, pension funds, investment funds, all those sorts of players will then be allowed to invest in crypto, because at the moment their statute only allows them to invest in certain instruments. So yes, they can invest in Bitcoin and Ethereum because there are Bitcoin and Ethereum ETFs. The rest of the crypto coins, for the moment, they're off limits. Okay, so the moment that is approved, it means that there will be eventually more volume coming to whatever ETF is approved. In this case, it will be the Cardano ETF. If a Litecoin or a Solana ETF is approved first, it will mean more volume to those coins. So generally speaking, when the ETF is approved, there is a kind of the floodgate starts to open, and there are like new funds that start flooding into those particular ETFs as well. Again, Bitcoin has attracted. Let's have a look. but we are at about 55 billion since inception. Okay, and if we look at Ethereum as well, Ethereum has attracted 13 billion. Okay, so if you use it as a percentage of Bitcoin, as obviously the one's been going the longer 55, Ethereum, let's say 25% of that. So a new ETF, if you count, let's say 25% of that again would be like 3 or 4 billion of funds coming in. And where does that sit compared to market caps? If you look at Cardano market cap is 30 billion. If there were like an extra 3 billion of funds coming in, can you say they've got quite an impact on price? Okay. And the same thing for, Solana is 110 billion. So again, 4 or 5 billion increase, it will be kind of like a smaller push because Solana is already close to an all-time high. But so you see what I'm talking about? And so just out of curiosity, the one that probably that's closest to approval was where is Litecoin? Where is it gone? Litecoin. So if a Litecoin ETF is approved, Litecoin is only like about 8 billion in market cap. So this can have quite a considerable effect on the prices of a specific coin, because it means that there's a lot more volume coming to that coin. I'll look another couple of things, and then we'll have a discussion and we'll talk about things. Okay, today it's kind of like monthly options are expiring. There's about 15 billions of options expiring today. And if we look at about the ratio of puts to call, which is this one, put call ratio is at the moment at 0.77. So any number below 1, it means that there are more calls. So more people are betting on Bitcoin price going up than people are betting on Bitcoin price going down. So again, so there are more purchase orders rather than sale orders. So the option trades as a list are indicated by this aggregate figure that they are leaning towards bullish for Bitcoin. Doesn't mean that the price is going to go up, but it's kind of like a little window or where people are placing their bets, because this is like people are putting money behind it, not just guys like me talking about it. So going forward, this is a very important month. Okay. As we discussed before, one part of it is interest rates decision, 17th of September. Remember that. The other part of it is probably what it is. The most important thing is the Clarity Act. You might have heard it if you read it in the news. Is going through the Parliament in the US. So by the end of September, that should be finalized. Okay. So we had already, the Genius Act has already been approved. Okay, so that was referring mainly to stable coins, and it's already been signed into law. Now, some lawmakers are still wanting to tighten the anti-money laundering controls and the restriction on foreign issuers, but the actual Genius Act has already passed. Now, the next one is the Clarity Act. What would it do? It will set up a comprehensive market structure for digital assets, clarifies regulatory oversight between agencies. So which agency will be ruling over crypto? Okay, so it could be decided, so probably that it won't be the SEC anymore, but it will be the Commodity and Futures agency that looks after crypto, and would be new asset categories will be created. So the Senate Banking Committee aims to finalize this legislation by the end of September. Then it would need to be approved to go through Parliament to be approved. But so it's a lot that's going through in September. There's a lot of discussion that's happening in Washington, and I know that a lot of the main players are actually talking to legislators right now about what to include and not to include in the Clarity Act. Now, the Clarity Act is probably the most important thing, is the one that it's will determine or not the entry of the big players in the field. Okay, because if you think that Apple, Google, Microsoft don't know about crypto, you might have something there. The only reason why they haven't got involved so far is because there isn't clarity around the rules. So once the rules are finalized, you would see, the next Windows 11 that gets shipped will have a crypto wallet already embedded in it. The same with Google Chrome. There's already, but if I'm using Brave, for example, and there is a Brave wallet already in it, already built in. So what do you think that Chrome would take long to have the same thing that's available as a third party add-on already? So, so all these things, all these big players are waiting to enact crypto because they're just waiting that the rules are set. Because each one of these companies that operates in hundreds of different countries across the world would make would save a lot of money by, for example, taking their fees in stable coins rather than in local currency. So just taking away all the banking fees, they can just repatriate the money without having to pay anybody, wiring fees to move money from X to Y, and it will make a big difference to their bottom line as well. So there will be, and the moment that you have, for example, Apple and Google entering, and one obviously there wouldn't be one that enters without the other because they wouldn't want to lose the competitive advantage. So the moment that other Apple, as like a branded Apple Wallet on their phone, or Google does the same to their phone, you'll get about 6 billion people having access to crypto overnight. Not that they all will use it, but you see it on your phone, it's on something on a device that you use every day. It's kind of the barriers to entry are much smaller because there will be then, video, YouTube videos of how to use your Apple Wallet or how to use your Google Wallet, etc., etc. So that could really open the floodgates. Obviously, it wouldn't happen straight away the moment that the Clarity Act is, enacted, but those are like building blocks that need to be in place for that to happen. Okay, I think this was mainly the last bit. There's a couple of things I can show you here on me. Again, we looked at did we look now? We look at the ETF inflows. So although the prices of crypto roughly has gone down this week, so this is the Ethereum inflows. So it's been a positive week from the point of view of ETFs. 471, we're getting close to $2 billion in one single week. Is a big amount. So big inflow this week here. And if we go and look at the Bitcoin ETFs, so again, prices have gone down roughly this week, but we've just had inflows this week, 200, 300, 380, for about $500 million have flown into the Bitcoin ETFs after we had, outflows the last 1, 2, 3, 4, 5, 6 sessions. Okay, so basically last week we had outflows. This week from Monday we just had inflows. Don't know what's going to happen today, but we'll see. So we're still here. We're still here with the price of Bitcoin. We'll see what happens. See if that makes a move before the end of the session or not. Okay, and the last thing is that what we started looking every week. So this is the Bitcoin realized price. So the average price that all the single Bitcoins that are in existence, the last price at which they've been moved, and this is the average of all those prices. At the moment, it's sitting at 52,400 per Bitcoin. And just to show you where it has gone from, when prices started again moving up in 2023, that value was about 20,000. So it's more than doubled in this cycle. So even if you look at from May, when we had the roughly when we had the what's it called, the halving event, May of 2024, that value was still at 28,000. Now it's 52. Okay, so we can say a value, if we could take a range around that price, that we could take that as a floor, of where the next bear market can get down to as a absolute maximum, probably. Okay, so I will look like a 10% either way of that, which means that we already are getting to the issuing price of the Bitcoin ETFs, because they started coming into existence when Bitcoin was about 40. I can't remember. It was in the kind of mid to high 40s when Bitcoin was launched, I think. Yeah, 46. Yeah, 46,000. Okay. 46,000 and it went all the way down to about 39, 40 before it started growing. But so we're already going kind of like we are beyond already the issuing price of the first ETFs. Okay. Which is interesting. And the other thing is also look at the market is heated or overheated, underheated. Again, the NUPL, the unrealized profit and loss, they still sitting at a very sedate 53.5. So nowhere near any really overheating, which happens above 75. So we are fine with that. So let's go 9:40. So let me stop sharing now. And let's start taking some questions. Okay, anybody has any questions? I am waiting.
Hey, Luca.
Hi, Jonathan.
I was just thinking after you were looking at the I can't remember the name of it, the price where Bitcoiners are,
the realized
profit or
price.
loss. Yeah,
The realized price we're talking about.
have they got the same for all the altcoins as well? So
Well, it will need to be a UTXO.
a UTXO chain. Okay.
Yeah, because otherwise you can't track them. You can't with an account-based coin like Ethereum, you can track, the price, the single coins that are issued.
Of course, clever. And then how does that correlate, or is there any correlation between that and the price that bear markets can be traced to? It's like
Yeah, so basically so if the price goes beyond that line, it means that the majority of the holders are holding at a loss. Okay, so that's the thing. So if obviously what happens is that with any investment, okay, you buy something, and then the price goes up and you have a paper gain. Okay, until you sell it though. So some people want to, especially if they have a long-term outlook, are thinking, okay, you know what, I'll keep the paper gain because I don't want to pay capital gains tax or any other reason. But they would come to a point where they think, you know what, I don't want to, if price starts retracing, I don't want to take a loss. So up to where the majority is still at a profit, some people will sell their position because they don't want to notch a loss. It's like psychological level more than anything else. Once the price moves below, so yes, there will be some panic because people now are bleeding. They're bleeding cash because it means they bought something at maybe 60, 70, 80,000 and now it's worth 50. But generally people tend to hold it because they want to make the money back up. So that's the simple way to look at it. So this is why I'm saying if you see that, so let me go back to that chart. Sorry, it's not this. Okay. If you see this, oh, no, not this one. Where was that realized? First, then last. Let me do. That's not all it goes to. It goes back to 2020. Okay. If we can see here at the beginning, like I can't get any further than that, I don't think. Maybe if I go into the weekly, let's see. No, I need to go into the paid account to do that. Anyway, you can see here in 2022. So this line is the realized price. Okay, so it was at one point, kind of at the lowest point, it was about just short of 20,000, 19,700. The actual price went down to about I think yeah, just 15,800, 15,900. So we are talking about maybe like maybe 15, 20% range around that.
Mm.
Okay, so if you build that 20% below that, will take you to about 40, about 42,000. And obviously this line, all the time the price is above it, will keep growing, because any transaction that's happening today is happening at 110,000. So then this will push the average up. And the opposite is true when price moves below, like you can see in 2022, the line will actually went down because the price that people were paying were below that point. But I would basically, I tend to use this as a kind of like a just very rough, and it's a very rough idea. You can't be too precise with these things because we're talking about kind of big averages, and it's individual people that make decisions. But generally speaking, if you look at the worst possible case scenario, and you can get this chart that go all the way down to the beginning, and you can see in all the crypto winters, so to speak, and then use a similar thing, maybe temper it down a little bit because now there's institutional investing. So if in the past we've gone like here in 2022, we've diverted by about 20% on the way back. Probably this time we're going to be a little bit less. So maybe I would use, instead of using 20%, I will use something like 15% or something like this. But that will create, it's sort of like if you had a band around it. So if you like deduct 15%, beyond it, that will give you pretty much what I expect the bottom to be out of the bear market. If the cycles, so there's lots of ifs in this. If we still go on with the 4-year cycle, it looks, seems to be changing somehow. But this is where I would consider the bottom to be around, probably around the 40,000 mark or so. And you know what that is relevant in particular. It's relevant in particular if you want to use your Bitcoins for yield,
Mm.
and you want to use them for DeFi. So I would make sure that I am safe, even if I got my Bitcoins on my long-term portfolio and I don't want to sell them, but I want to use them, maybe lend them out, or just borrow some money out of it to do something else. Now I'll make sure that I am covered even if Bitcoins go back to 40,000. So that means that, what would be my loan to value at the moment? Bitcoin is 110. I want to make sure that I'm not liquidated even if price goes back to 40. So I'm looking at roughly about 35% maximum loan to value that I would allow myself to borrow at if I wanted to use this in, as a collateral, for example. Okay, so that's the way I use it. It's not necessarily, the right way, but gives you a rough idea of what you can do safely, fairly safely, because we never know. In the past, Bitcoin has gone down 85% several times. So in this case, 170 to 40, it's 70,000. So we're talking about 65 to 70% dropout, which I think is fairly safe considering that we now have institutional investing in Bitcoin.
Mm.
Another thing that I think is worth looking at is, obviously take that with a pinch of salt, because this is basically an Ethereum Maxi website. Okay. This is called Ultrasound Money. Okay, there is tracking that is tracking Ethereum and the increase in Ethereum supply since Ethereum changed from a proof of work to proof of stake. Okay, so this is so the launch was actually in sorry, when was that? What does it say? I can't remember. What's the date? Update. Supply chain. So this is what it would have been like if Ethereum had carried on as a proof of work since launch. It would have generated a new 93,000, almost like 100,000 Ethereum. But instead, with the current system, there's been like a positive coin creation, but a lot slower because they introduced burning of transaction fees, where they're burning some of the new coins that generated. So Ethereum has become actually quite stable. Although they don't have a maximum ceiling the way that Bitcoin or Cardano have, they're in practice because of the new system that they are generated at the moment. In a way, the inflation in Ethereum is even less than since they changed this. It's even less than Bitcoin's inflation, because Bitcoin inflation at the moment is about 1.5% a year. I think this fees, what is it? I'm just trying to see. So it's quite interesting to see where kind of they have these kind of projections on supply.
Yeah.
So this was kind of the merge was in 2020, September 2022. So it's been going on for 3 years. Okay, so this is where it's just slightly increased during the merge, and this is where they expect on the next year or so to still increase very slightly, but to become quite stable in a way, kind of similar to what happens for the coins that have got like a maximum number of coins in circulation. And yeah, at the moment the rewards, the staking rewards is about like 2%, 2.8% a year in Ethereum. I saw something the other day. I can't remember where I saw it. Which is about the inflation compared to, oh, there we are. So at the moment, the kind of inflation rate in Ethereum is 0.77%. And the Bitcoin actually is now, since the halving, is now 0.826%. Okay, so at the moment, kind of Ethereum has got a lower inflation than, if you want to call it inflation, by the way.
Yeah.
So when we talk about inflations of Bitcoin, this is the difference between, basically Ethereum, Bitcoin, they're very close, and this is the inflation that there was before the merge in Ethereum. So Ethereum had an inflation over 4% before the merge. Now it has gone obviously below 0.8. Now, when we talk about Bitcoin inflation, we're talking about the new coins that the miners receive every 10 minutes, basically, when a new block is created. There's no inflation as such, but it's part of, before we get to the 21 million, there are now 3.25 Bitcoins being generated every 10 minutes. So the sum of all of those new Bitcoins every year, it's about 0.8%. 0.8%, or get that. Yeah, 0.82% a year, which is interesting, isn't it?
Yeah.
Again, just to remind everybody, this is skewed here to make Ethereum look good. As you would do, it will look completely different. It's like a Bitcoin maxi. Prepare that, I imagine. But it's got some interesting data, and data is data. Then statisticians can basically stretch the data to prove one point or another. but the raw data is raw data. So the number of coins that have been generated, net number of coins since the merge is it's a point of fact, you know, and the difference between what was happening before and what's happening now, it's relevant.
I really like those that page actually. I think it's very well put together, have that comparison. It'd be great to have other chains on there as well, Cardano and Midnight in particular. I was thinking because that's now got a new model for how to manage your inflation, rewarding the operators of the network while still having gas around to pay for fees.
Well, Jonathan, are we talking about like this is almost like a business case for you to build something similar for Midnight? You know, just you know, if you get that sort of interest and you get something like this, then it's, you know, it's, you can have a
Valuable,
business case. You can start selling. You can start selling. You know, advertising on it. You know, as all the kind of like websites, they have good numbers too. You know.
Yeah, I'm just not sure my maths is strong enough for pulling it out accurately. I might end up just creating a ultrasound money for Cardano that makes Cardano look fantastic.
Well, at the end of the day, just picking up on you know, once you got the formulas in place, you're just picking up the numbers from the chain, isn't it?
Yeah, I'd
Yeah,
have to. Yeah,
that's the idea. So it's talking about, you know, you build it and then you kind of like you get it audited. You think, look, have I made any boo-boos in the formulas? How does that work?
yeah, it'd have to be open source.
Yeah.
Matteo just dropped a question about Midnight.
Then still in line and no changes in the position. Not that I know of, but what about, you know, do you know anything, Jonathan?
No, I think it's just improving again. So taking more and more wallets, procedures getting smoother for a wider and wider ecosystem of chains and wallets. So keep checking if yours isn't covered yet. But yeah, we've still got time, and we're covering an awful lot of wallets now, so it all looks good. Procedures the same.
Yeah, no, definitely. So anybody so remember that you are entitled to a free airdrop of Midnight if you, at the 11th of June, because that's when the snapshot was taken, you had in a wallet, so in your own wallet, not only in an exchange, okay, but if you had your own wallet and you had a number of eight different coins, or that could be, it could be like Cardano, get the biggest chunk of that, Bitcoin, Ethereum, you know, Avalanche, Solana, XRP, Brave, Attention Token, and I always forget the eighth one. But and so if you go to midnight.gd, that's where you do your claim, and you put your addresses where you add those coins, and you see if you're eligible. They tell you how many tokens you'll be eligible to claim, and you complete the claim, and then when the tokens are generated in about whatever, in less than 2 months, you will then receive your tokens in that wallet. Okay, so yeah, just go and have a look at it, play around with it, and just put all your addresses, you know, all your wallets through it, and see if you've got a claim. And then I think Jonathan, in about a month's time, will tell us how we can scavenge for some for some tokens, even if you couldn't claim any because you had no claim, you had no tokens on those particular chains. You know, you can still get some free tokens that way.
Yeah.
Yeah, we'll talk about that later. Okay. Anybody else? Any more questions before we close for the week? No? Okay. So if there are no questions, let me just check. There's one thing I need to. One of you, I need to message directly. Okay. So yeah, we'll close the call right now. If I could ask Gary, would you actually stay back? I just wanted to have a chat with you, and as you're already on the call, so I don't have to contact you directly, you know, separately. So I wish everybody a fantastic weekend, and watch this space. I'm coming back on Friday, kind of like early hours of the morning. I may or may not do a crypto hour. but it kind of probably will anyway. But just prepare some questions because I don't think I'm gonna have a lot of time to do any research. I'm away most of next week, so it probably will be like a free for all, okay, like a chatting session, looking at prices and doing a few things together. But apart from that, I think there's not gonna be new info from me coming in. Okay, so have a fantastic weekend. If I could ask you to leave the room, because if I have to kick you out, then you won't be able to get back in next week. And have a great weekend.
Thanks very much,
Thanks,
Luca.
Luca.
Bye, everyone. Bye-bye. Hey, Gary.
Luca,
Hi, how are you?
all right, so